Stening from FIIG Securities is standing by. Look at the reaction of US Treasuries, Jim, in this environment. Quite telling. What do you make of it?
Yeah, well, look, I mean, it's interesting. I mean, we've seen a rally in that market. I think in the scheme of things, if you take this crisis out and look at it in isolation, in another time, the reaction probably would have been more dramatic. I'm actually of the view that this is a relatively muted reaction to what's unfolding.
What would turn it from muted into a concern? What sort of spikes are you looking to see in Treasuries?
Yeah, look, I don't want to make light of the situation at all, but I do think that the price action is telling me that the underlying trend for Treasuries moving higher is intact. Now, I suppose if we see this dragging out for an extended period, well, then that can obviously yields could rally dramatically from here, I suppose. But I think that what the market is saying is that this is something that will resolve itself in the relatively short term.
Okay, so fairly benign. Let's move into some domestic developments. Bendigo and Adelaide Bank. I know this was on the radar for your colleague there yesterday. Yes. Tell me about the key points to come out of this one.
Well, I suppose the key dimensions of the transaction is that it's a 3-year transaction looking to pay 1.4% over the bank bill rate. It's a floating rate note, so that rate will reset every 90 days. So if interest rates move up, obviously the corresponding coupon will move up as well.
What are they going to do with this $250 million? Is it purely for domestic lending?
Well, look, it is. I mean, I think, it's a very interesting development, I think, with this particular sector, the regional banks or the smaller banks. Accessing the retail bond market helps to diversify their funding. And in order to grow, with the lack of access to securitisation, these banks need to look at new ways to fund themselves. So, I think this is an interesting development. If you look at, say, the potential for smaller banks to diversify with larger transactions as opposed to the major banks where they've got such a massive funding task, it's a real niche that these players can take advantage of.
Is it encouraging that they're launching this, and implicitly behind it they must be saying there is demand, there is consumer demand at the end for credit in the round?
Yeah, look, they are. I mean, I think this is a competitive yield. The thing is with a retail bond, particularly a listed bond, obviously there's liquidity, so entry and exit makes it more attractive than, say, a term deposit asset. Also, I think there's probably it's worthwhile considering where we are in the cycle, because if in fact this momentum, I suppose, that's coming through into the global market of recovery and what have you, then traditionally we see those credit spreads condense. So over time there's potential to outperform as well.
Well, at 140 basis points above the swap rate, what could that level fall to make it a more sort of comfortable cushion?
Well, I suppose, I mean, as far as an investor goes, I mean, obviously, in the shorter term, banks don't have to pay as much as they do for longer term funding. So, all things being the same, holding that bond for a year, you move down the yield curve, and you'll obviously there'll be a built-in capital gain there.
That is if the spreads contract.
Yeah, well, that's on top of that, spreads can contract as well. I think one of the advantages of holding that bond, as you come down the maturity curve, your credit spread compresses. Therefore, your break even if spreads move out is wider.
All right, are you going to be bold enough to say who might be next?
Well, I really think that the banks are a logical place. They do need funding to grow. They need to grow on balance sheet because of this lack of securitisation. So I think we're going to see more of that. I think these entities are exempt from the disclosure requirements that ASIC have put in place. So it just seems logical. But
until we do perhaps see a wider issuance, it's too soon to call a breakthrough moment in retail bonds.
Yeah, look, most definitely. I mean, I think there's a lot in the pipe. There's a lot of changes. I mean, I think competition from debt markets is something that we'll see for the major banks in terms of loans to all sectors of the economy through this year.
Jim, value it. Thank you so much.
Thanks, Carson.
Appreciate it. Jim Stening.